Welcome to the Wealthy Trades Daily Market Forecast for May 22nd, 2015. Let's get started. We are going to be going long, actually doing a pairs trade today. The market didn't do much yesterday. Let's look at the SPY, kind of see what it did. Opened at 212.70, closed at 213.50. So, an okay rally day. It's still kind of struggling, not struggling real bad, but still figuring out does it want to break out from these levels. And if you were to ask me, does it want to break out from these levels? The answer is yes, it wants to break out from these levels. Now, what's interesting is yesterday I put a high at 213.75, which isn't quite higher than the all-time high that it put in on Wednesday. So it'll be interesting to see if it can actually get some legs and break out today. But yesterday we were long PEG, which outperformed, did really well. Opened at 43.32, closed at 43.76. The utilities started to rally. This was up over 1%. Our weekly trades are looking pretty good, or our day trades looking pretty good, obviously because of because of yesterday, up over 1%. Now our weekly trades are doing really good. We are long KR. Kroger's, which has just been a stellar outperformer for a while now. Long KR, and it opened at 72.83 for the week, and it is currently at 74.05. So 74.05 and 72.83. So up right about 1.6%, and then we are short in SWN, which was looking phenomenal and still looking good. It was down, quite a bit at one time. I think it was Wednesday, but opened this week at 27.72, is now at 27.33. So 27.32, and we're short. So 27.72 and 27.33, we are 1.4. So overall up, give or take about 1.5% if you are both long KR and short SWN. So really good in comparison to what the market's doing. Really good there. And then, as you know, for the month, we are still long the XLV and CAH. That's what we're long, and that's what we're going to stay long until the month ends. But for today, all right, and again, I don't like focusing a ton of time on the on day trades, but it's providing daily commentary. Mainly, I see us breaking out of the SPY. I see us continuing to rally. This is indicated by the market trend pointing up. All right, obviously, we have 69.3% of the stocks moving in that uptrend. The quality of the uptrend is not above 50%. So therefore, we want to do a pairs trade. So what I'm going to do is I'm going to look at the XLI because it's the best sector, and let's find the best stock to go along within the XLI. Now, one of the things you can do if you do believe in this rally is instead of doing a pairs trade, all right, I talk about pairs trades if the quality is below 50%, but instead of doing a pairs trade, what you can do is you can just go into the best sector and just lower the size that you're trading, right? So maybe do half the size that you would normally do if the quality is not above 50%. I like pairs trades because you can get those days, like we've had. Whoops, sorry about that. We can get those days like this week, actually, in long KR, short SWN. We can kind of get that double bang, where you can get the long position working in your favor and the short position working in your favor. Not only that, but doing pairs trades on days where the quality isn't great will give you kind of that hedged play, which is nice. You may limit your returns. They may not be as stellar as you'd like, but your risk is also not going to be as much typically. So, all right, let's pare this down. We're looking for a best long opportunity. So I'm going to look at the levels and levels spread here, 28.9. Compare that to 28.11. All right, and 30 and 7 is better. So 30 and 7. That's 30 and 7. All right, so now it's between GD and AME. So both 30 and 7. All right, we got 53 and 23, and 55 and 21. So GD is better because it hits the trend side more often, and it hits the counter trend side less often. So GD is going to be our long, and then we're going to pair that with a short in XLE in the energy sector. So let's bring the energy sector over. And the energy sector's actually been really, really choppy. It almost looks like it's looking for a direction two, trying to break out, bump it along, and we'll see how it reacts. But we are going to pair that and look to go short today. So let's bring this down. Let's eliminate anything that doesn't make money. on both sides. So moving through this fairly quick. Again, I would suggest you guys watch these guys and gals watch these videos every day just so you can get used to this pair down technique. Um, on days like today where I'm moving kind of fast. Okay, so now we've got it. These are all three of these that are moving down in purple. Those are the ones that make money. All right, levels to win. Both levels to win sides make money. So now what we want to do is we want to look at the levels and level spread. How often does it close below the trend side? How often does it close above the counter trend side? We want that spread to be what? We want a big number up here and a small number down there. It's real simple. So 23 and 11. Compare that to 30 and 7. Obviously, 30 and 7 is better. And 30, that's better than 30 and 13. So here's our play. We're going to go long GD, all right, at the open. There's two areas where you can add. Adding to the position at 140.18 is good. It makes money there, and it doesn't close below that level often. Also, adding at 140.178 is a good trade there, too. Close at the end of the day. So go long GE. Close at the end of the day, and on this on the pairs, what we want to do is we want to pair that with a short position because the quality is not above 50%. So, NE is the best shorting opportunity today to pair it with. So again, you can add at $18 because that's a good short area, or $17.26, but short at the beginning of the day, close at the end of the day. There's our trade: long GE, short NE. For the week, I will do a weekly recap, and we're getting close to the end of the month. Our monthly trades continue to outperform very well. I had a couple earnings plays that I sent out this week. Vodafone's a perfect example of one where it did not look good at first at all. In fact, it was a naked call. It didn't look good at first at all, but patience. Remember, when I send out those alerts on the naked calls, they're sent out as an all or nothing trade, meaning if it has a negative response, then you know what? Why close it? I assume it's going to be a loser anyway. But I'm going to keep my target in place. And because I did that, what happened was Vodafone gaps down, and it looks like a bad trade. And over the next 2 days, it rallies up and hits my target. So I got in for 60 cents, and then my target was $1.40. So because I just held it and thought, okay, you know what, it looks like it's going to be a bad trade, the thing rallied up and took me out and hit a target. So that was a great trade that ended up, at first it looked like a horrible trade. It ended up being a really good trade. So anyway, let me know if you have any questions. You can email me at info@wealthytrades.com. I was hoping to get the options course finalized this week. I'm putting some final touches on it. I am very much hoping to get this out early next week. Let me know if you have any questions. Do not let your trial subscription expire. $74 a month is a steal to stay in front of the markets. Make sure you know where they're moving and the best places to allocate money. Email me, info@wealthytrades.com if you have any questions. Have a great day.